All right, let's dive into one of the most talked about IPOs of the year, Lenskart. You've probably heard the hype around this massive success story, but is it justified? We've waded through, get this, over 1,100 pages of their official IPO filing so you don't have to. We're going to break down the good and the bad, the bull case and the bear case, all in just a few minutes. So this is really the core question, isn't it? For anyone thinking about investing, you have to decide, is Lenskart a revolutionary tech company that's set to just keep growing like crazy? Or is the hype simply pushing the price way beyond what the company is actually worth? To figure that out, we've got to look at both sides of the coin. So here's our game plan. We'll start with the absolute basics of the IPO. Then we'll get into the 5 key arguments for investing. That's the bull case. After that, we'll cover the 5 biggest red flags, the bear case. And finally, we'll wrap it all up by looking at the core conflict at the heart of this whole thing. Okay, first up, the basics. Now, Lenskart has been very smart in how they've positioned themselves. They're not just an eyewear company. No. They are a technology-driven disruptor in a huge industry. And after years of private growth and building a brand that's, pretty much everywhere, it's finally ready for its public debut. Let's kick things off with the bull case, the optimistic view. There is a ton of excitement around this IPO, and it really boils down to 5 main strengths that have investors feeling super optimistic about where Lenskart is headed. The first big positive is their business model. Lenskart operates on a tech-heavy, direct-to-consumer platform, or D2C. Now, in the eyewear industry, which is usually a fragmented mess, this is a total game changer. It means they've cut out all the middlemen, the wholesalers, the distributors. They control the whole process, from the factory right to your face. And having that direct line to the customer, both online and in their stores, lets them slash costs and just completely own the entire user experience. And is that model working? Oh yeah, it's working. Just take a look at their customer growth. It's jumped from 7.7 million to a massive 12.4 million in just a couple of years. We're not talking about a small uptick here. This is a huge expansion of their reach. And it's not just an online story either. Their physical footprint is absolutely exploding. The number of Lenskart stores has shot up from just over 1,900 in 2023 to more than 2,700 today. I mean, they are literally becoming a fixture in cities all over the place. Positive number 2 is their geographic spread. About 60% of their revenue is from India, but they have a really strong 40% coming from international markets. And this is so important because it means they aren't totally dependent on just one country's economy. It's a much safer way to scale. The third positive? Well, it's just pure market dominance. In the organized eyewear space in India, Lenskart isn't just the leader, they are miles ahead of everyone else. Their revenue is at least 65% higher than their closest competitors. They have built an incredibly powerful brand. The fourth point is all about profitability. Their EBITDA margins have more than doubled in 2 years, going from under 7% to over 14%. And what this shows is that as the company gets bigger, it's also getting way more efficient. That's a classic sign of strong operating leverage, and it's something investors love to see. And last but not least, the fifth positive. Lenskart is growing at a wild pace. While the entire eyewear industry is expected to grow at a pretty healthy 13% per year, Lenskart's revenue has been rocketing up at over 33%. Think about that. They are growing more than twice as fast as the market itself. Okay, so that's the bull case. It's a powerful story, right? Growth, disruption, dominance. But now we have to look at the other side, the bear case. These are the 5 big questions and risks that should definitely give you pause. First on the list is a huge question mark hanging over their profitability. You see, after years of losing money, the company suddenly posts this nearly 300 crore profit right before its IPO. But if you look a little closer at that other income line, it almost doubled. This brings up a really critical question. Seriously, where did this sudden burst of profit actually come from? Was it some massive turnaround in their core business of selling glasses, or was it something else? And well, here's the answer. A huge slice of that profit, we're talking 167 crores, is from something called an FVTPL gain. Now look, in simple terms, this is just a one-time, non-cash accounting trick related to an acquisition. It's not real cash they earned from selling glasses, and it's not repeatable. So this raises some serious questions about how sustainable their profits really are. The second negative is the valuation. And wow, is it steep. A price-to-earnings ratio of around 230 is incredibly high. Let me put it another way. At this price, the market is valuing each one of their stores at about 25 crores. That's a really hefty price tag. Negative number 3 is a geopolitical risk you can't ignore. A pretty significant 42.2% of Lenskart's total imports come from China. Any disruption in trade relations between India and China could cause a huge headache for their supply chain and, of course, their sales. Now, for the fourth negative, and this is a really big one for a lot of retail investors. In the last year, the promoters, and that includes the CEO, they bought shares for just 30 rupees. In this IPO, they're part of the group selling those shares to the public for 402 rupees. Yeah, you saw that right. That's a gain of over 1,400% in just 1 year. Now, look, promoters deserve to be rewarded for their hard work, but a jump this massive, this quickly, has to make you wonder how much value is really left for new investors coming in now. And our fifth and final negative is about where the IPO money is actually going. A huge 70% of the funds being raised are for an offer for sale. All that means is the money isn't going back into the company to fuel more growth. It's going into the pockets of existing investors and promoters who are cashing out their shares. So where does that leave us? We've seen this incredible growth story on one hand, and then some very serious financial red flags on the other. It really all comes down to a central tension. And this right here is the core tension of the Lenskart IPO. On one side, you have this dominant, high-growth, tech-first company that is just crushing its competition. But on the other side, you've got a sky-high valuation, profits that are being propped up by one-time accounting moves, and insiders who are selling off a big chunk of their stake. You know, as always, our goal here isn't to tell you whether you should invest or not. It's really just to cut through all the noise and give you the clarity you need to make your own informed decision. Lenskart is, without a doubt, changing how we see the world, one pair of glasses at a time. The ultimate question for you to decide is this. At this incredibly high price, has all of that amazing future growth already been priced into the stock today?